¿Cómo estamos, mis amigos y amigas? Llegó la hora, llegó el momento. ¿Qué será el día de hoy? ¿Será rojo o será verde? ¿O será un color entre medio? Bueno, no lo sabemos, lo sabremos en un par de minutos, como está el día de hoy. Hoy vamos a cubrir lo que es la conferencia del tío JEROME. Espero que la estén pasando increíblemente bien. Vamos a estar aquí viendo lo que va a pasar al final de todo. ¿Qué será? ¿Será verde o será rojo? ¿Qué es lo que ustedes piensan? Comiencen a comentar en la parte de abajo, mis amigos y amigas. A todos vamos a hacer esto alegre lo más que se pueda para no comenzar a llorar. Ahora hay ciertos puntos. Primero es que mientras esté hablando Jerome Powell, yo voy a estar poniendo atención. Entonces, si no hablo, es porque estoy poniendo atención y estoy viendo ciertos puntos, ¿ok? Ahora, si yo voy a hacer algún movimiento, sí lo voy a indicar. Estoy con un ojo muy puesto a un movimiento que tengo uno de mis sell calls. Ahora, si veo algo que sea bueno, es muy posible que voy a cerrar este sell call, ¿ok? Ahora, para que sepan un poquito de lo que estoy hablando, yo tengo estos sell calls en lo que los tengo bastante arrasados. Y es este de 20.50. Ahora, algo que sea de buena noticia, sí, posiblemente vamos a ver que a final de la semana va a sobrepasar este precio. Y por eso es que me voy a salir de este contrato. Voy a estar muy al pendiente porque también si no son buenas las noticias y esto es lo que yo espero, pues lógicamente me voy a mantener. Entonces yo voy a estar muy callado viendo lo que pasa, pero si llego a salirme de este contrato, siempre les voy a decir, ¿verdad? Ahora siempre analicen y estudien. Esto siempre. Recuérdense, hoy nos vamos a juntar después del cierre del mercado, una hora después de nuestro club VIP. Si no se han unido, únanse a nuestro club VIP. También tenemos nuestro curso. Ahora nuestro curso estará subiendo de precio, mis amigos y amigas. Les estaré agregando lo que es lo básico de las opciones, lo que es este mes, y también estaré agregando lo que es información sobre taxes y el wash. Esto lo estaré agregando en nuestro curso este mes. Entonces significa que cuando lo agregue va a subir de precio, pero si ustedes ya lo obtienen, pues van a poder recibir esa actualización. Entonces ahí únanse, mis amigos y amigas. Ahorita estamos en la espera de lo que diga Jerome Powell. Aquí estamos a 22 minutos, ¿ok? A 22 minutos de lo que es esta conferencia, ¿ok? La vamos a estar transmitiendo en vivo. Estamos en la espera. ¿Qué es lo que ustedes piensan que pueda pasar? Yo en lo personal, yo ya he hablado sobre lo que espero que pase. En realidad que yo sí pienso que la Fed va a salir bastante fuerte, bastante agresivo. Creo que sí va a haber una alza de 50 basis points, y no solo eso, sino que no van a dejar las dudas que cuánto más van a subir los intereses, lo que siguen en las siguientes reuniones. Esto es lo que yo pienso. Yo ya hice un video. Yo creo que Jerome Powell ya nos había dado las señales hace una semana, y pues no creo que haya cambiado su perspectiva desde hace una semana, y por eso yo voy pensando más a ver una baja. Pero ¿qué es lo que ustedes piensan? Comiencen a comentar en la parte de abajo, comiencen a compartir el video. Aquí estamos en vivo, estamos en lo que es a 22 minutos de esta conferencia. Aquí lo estaremos transmitiendo en vivo, mis amigos y amigas. Prepárense porque si viene algo que estamos esperando. Siga la última actualización de las medidas de la Reserva Federal. Se prepara para subir la tasa de intereses. Aquí estamos transmitiendo en vivo. El mercado está bastante volátil, que nos estamos dando cuenta. Está en las bajas, en las altas. Ciertas acciones están sufriendo, otras no. Porque recordemos que lo que fue el último aumento, vimos un rally de 2 semanas, lo que vivimos aproximadamente. Estuvo un día volátil ese mismo día, pero pues vimos un regreso bastante bueno. Ahora, ¿qué se espera? Vamos a ver lo que termina pasando. Pero yo en lo personal sí voy viendo a que poder sufrir un poquito más. Aquí estábamos viendo ciertas acciones ya están cayendo, ya están comenzando a ceder. Aquí estamos, mis amigos y amigas, ¿cómo están el día de hoy? Espero que la estén pasando increíblemente bien. Vamos a comenzar a saludar a todos. Ya se está valorizando mi sell call. Eso es todo. La Lucid comenzó a caer y me está generando billete. Esto vamos a ver aquí. Estamos viendo. Miren esta candela. Miren esto, aquí está Lucid, eso es todo. Bueno, yo en lo personal yo iba a la baja con Lucid y pues aquí estamos, ok, perfecto. Ahí vamos, un fuerte abrazo a todos los que se están conectando. ¿Cómo están el día de hoy? Espero que estén increíblemente bien. Vamos a comenzar a saludar a todos los que están en este momento aquí sincronizados en lo que es esta conversación. Vamos a ver, aquí dice Marvin Lima, ¿cómo estamos? Diken, buenos días. Nazario, agárrense los cinturones que nos vamos a la luna. Eso es todo. Alguien positivo. Norvin Rivera, activo. Elizabeth Telsor, 50 basis points. Jesús Santillán, ¿qué nos dice? Si el tío Pavo no le dan un el mercado, le voy a invitar a una chelita gallo bien fría. ¿Qué pasó, Jesús? Solo al tío Pavo. ¿Y dónde está mi cervecita? Yo quiero una cervecita. Por favor, ok. No seas así, solo para el tío Pavo. Imagínate, no, hombre, no. ¿Qué pasó, Jesús? Y sistema oficial, se vienen los 75 basis points. Saludos, Marvin. Ok, vamos, ahí estamos allá. Ya están comentando qué es lo que piensan. Comenten qué es lo que ustedes piensan. Ok, ya sistema oficial dice 75 basis points. Decan, esta subida de 50 basis significa que harían los intereses en 75 por la subida anterior. Esto es correcto, Decan. Ya se agregan, ya estamos casi a 1% de la alza. Vamos a ver aquí, Selvin Guzmán, aquí estamos al pie de cañón, aquí están todos al pie del cañón. Hola, dice Dayana, ¿cómo estamos? Un fuerte abrazo. Aquí estamos ya en vivo, viendo lo que va a pasar aquí en lo que está sucediendo Jerome Powell. Un fuerte abrazo a todos los que están en este momento sincronizándose. Comiencen a comentar qué es lo que ustedes piensen, ¿verdad? ¿Qué es lo que piensan que pueda pasar el día de hoy? Un fuerte abrazo a todos. Aquí estamos viendo lo que está sucediendo. Un fuerte abrazo. Seguimos aquí transmitiendo, aunque estamos a 17 minutos de lo que es esta transmisión. Mucho ojo, aquí estamos. Un fuerte abrazo a todos los que se están aquí conectando. ¿Cómo están el día de hoy? Ahora yo sí voy a estar muy enfocado en lo que pueda venir y hacer, y también con mis circles, porque sí tengo una muy buena movida, ¿ok? Aquí estamos, un fuerte abrazo a todos, esperando que se valoricen más mis circles. A saber aquí cómo están el día de hoy. Vamos a seguir viendo cómo sigue respondiendo la bolsa. Aquí ya está agarrando un poquito más de aire. Vamos a ver aquí están los índices. Los tres índices aquí están completamente a dos verdes y un rojo. Vamos a ver aquí, un fuerte abrazo a todos los que están conectando. ¿Cómo están el día de hoy? Espero que se la pasen muy, pero muy bien. Aquí estamos viendo lo que está sucediendo. Vamos a ver aquí, seguimos. Vamos a ver. Fuerte abrazo, comiencen a compartir el video. Vamos a ver aquí, dice Jesús Santillán, para ti va a ser un 24 de chelitas gallos. Eso es todo, Jesús. Eso es lo que quería yo escuchar, música para mis hermosos oídos. Queremos unas chelitas. Alejandro Ríos, qué arrastrada, bro, ya no duelen los chingadazos. Tanta masacre que nos pagan. Estamos más que acostumbrados. En realidad que sí, miren que ahora sí ha sido difícil. En realidad que hemos estado comprando en las caídas y no terminan de caer. Ahora, yo les voy a ser sincero, ¿ok? Yo sé que a veces siempre les digo yo que la paciencia termina pagando, y en realidad que es cierto, yo no sé, pero ¿qué tanto más puede caer ya en el mercado? Yo creo que hay ciertas empresas que ya están súper descontadas y va a llegar un punto donde vamos a llegar al fondo, ¿ok? Ahora, no se sabe cuál es, pero posiblemente ya lo estamos tocando. Yo veo ciertos precios donde pues estamos regresando incluso antes de la pandemia, y esto me hace a mí sentirme también que pues podemos ver un regreso bastante rápido, y por eso mismo tenemos que tener mucho cuidado, ¿ok? Yo en mi circle los estoy jugando bastante apretados para generar billete, pero también en ciertos puntos, así como hoy, estoy muy al pendiente de lo que pasa en el mercado. Estoy siempre viendo lo que pueda pasar, sigo ahí firmes y con mucho cuidado, porque en realidad que eso es así, ¿ok? El mercado puede girar y irse a la alza en cualquier momento y por eso tenemos que tener mucho cuidado. Ahora, aquí seguimos a todos. Un fuerte abrazo a todos los que están conectando. Aquí estamos viendo lo que está sucediendo. El mercado está bastante volátil, ¿verdad? Pero ya se está acercando a la espera lo que diga el tío Jerome. Tema oficial, Patrol va a salir agresivo. Ya lo dijo, no lo importan los números. Dejen mi like. Perfecto. Y esto es lo que, miren, no es por nada, pero ya lo dijo, ¿ok? Yo hice un video el día de ayer y yo en el video fui muy claro, ¿ok? Aquí dije, en este video, si no lo han visto, ahorita todavía lo pueden ver. Todavía no ha salido el tío Jerome. Pero en este video yo hablé sobre cómo era el pensamiento de Jerome Powell. Ahora, en este video es bastante claro porque estamos de una u otra forma viendo lo que él piensa. Hace una semana esto fue, ¿verdad? Hace una semana fue que él habló y habló sobre esto. Entonces, por lo mismo, yo en lo personal pienso que Jerome Powell va a salir bastante agresivo. Ok, no se sorprendan, creo que va a salir hawkish, como le llaman, y va a, si sube 50 basis points, nos va a dejar las dudas que es posible que suba más todavía. Ok, ya dijo que de una u otra manera no le interesan los números, en otra forma ya no están viendo sobre números, sino que le interesan solamente los hechos. Y esto es algo muy grande también, ok, entonces hasta pueden subir a 75 basis points. Entonces agarrémonos los cinturones. Yo en lo personal, yo ya tengo bastante apretados mis sell calls, ok, aquí lo pueden ver. Este es el que tengo ahorita, aunque ya se está valorizando cada vez más, pero no los estoy cerrando. Usualmente yo los cerraría porque miraría uno a la alza, pero no, yo voy más a que se puedan valorizar mucho más. Entonces me estoy quedando con ellos. Ahora, solamente si escucho algo que diga él en 25 basis points, los cierro, ok. Ahí sí lo cierro porque sí vamos a ver podemos decir de una u otra manera, un giro totalmente rápido en el mercado. Ahora recordémonos, algo menor de 50 basis points, ¿ok? Va a haber un retroceso bastante a la alza. ¿Por qué? Porque el mercado ya facturó los 50 basis points. Ya está facturado, ¿ok? Ahora solamente es qué tan hawkish sale él y qué tanto nos recuerda de cuánto más van a subir, que el mercado le puede impactar más, ¿ok? Ya yo siento que el mercado ya facturó estas 3 reuniones que siguen, pues a 50 basis points, ¿ok? Esto ya está facturado, yo creo que ya lo sabe el mercado, ya lo sufrimos, pero algo que nos entre todavía más dudas de lo que ya está facturado, esto lo podemos ver mal, ¿ok? Pero si en dado caso viene y pues lo que es el interés lo llega a hacer a 25 basis points, puede ser el mejor caso y el mejor escenario, y sí podamos ver un retroceso a la alza completamente. Entonces mucho ojo, vamos a estar pendientes. Yo en lo personal pienso que no va a pasar, ok, ya lo dijo, ya es muy claro lo que va a hacer, y pues aquí estamos en la espera. Michelson Ramos, hola Marvin, ¿cómo ves los precios de las casas de aquí a 6 meses? Miren, yo creo que los precios de las casas van a comenzar a bajar. Ok, lo que pasa es esto, muchos pensarían que ya debería de comenzar a bajar, y pues no es así, que digo yo, a la rápida que esto sucede. Esto es un proceso, pero por sí se está viendo un retroceso, ¿ok? Se está viendo un retroceso a personas que están adquiriendo préstamos, se está viendo un retroceso en personas que están refinanciando, y eso que apenas están subiendo los intereses. Esto significa que entre más comienzan a subir los intereses, pues este retroceso se vuelve mucho más grande, y esto significa que van a haber menos personas comprando propiedades. Ahora, recordémonos qué tiene que ver eso a que bajen las casas. Eso muchos me van a preguntar, porque tiene que ver personas que estén agarrando préstamos a que tengan que ver con que bajen los precios de las casas, y tienen mucho que ver, porque recordémonos que todo se va funcionando como la ley de la demanda, ¿okay? Las propiedades en este momento pues se están yendo hasta el cielo. ¿Por qué? Es porque hay mucha demanda, ¿ok? Hay mucha demanda y hay poco producto. Entonces eso significa que las pocas casas que salen en el mercado, pues hay muchos que quieren comprar casas, y lo que pasa ahí es que pues los dueños de propiedades, los bancos, todos venden las casas mucho más caras, ¿verdad? Porque hay muchos que pues quieren estas casas, y así es como se elevan estos precios y las personas lo pagan, ¿verdad? Uno puede sacar una propiedad en $450,000, pero si alguien te ofrece $475,000, lo vas a agarrar, ¿verdad? Pero, ¿qué es lo que pasa cuando comienzan a haber menos compradores? Que los inventarios, las propiedades comienzan a salir en venta, pero ya no hay tantas personas que compren, y así es que como cuando comienzan a bajar las propiedades, porque hay personas que les urge vender, y pues después de ahí es cuando comienzan a bajar por debajo del precio, y ahí comienzan a bajar las casas. Entonces espera, aunque muchos piensan que pues pueda caer como cayeron en 2008, yo siento que no va a ser así. Yo creo que si van a caer poco, pero siempre hay que mantenerse uno firme esperando. Yo sí, en lo personal, sigo ahí. Yo siempre he dicho, estar en el mercado alistándose uno para comprar tampoco no es malo, ¿ok? Uno se puede alistar, se puede uno preparar, y cuando uno ya esté listo, viene y aprieta el gatillo, en pocas palabras, ¿verdad? Esto es así. Entonces, en una u otra forma, yo estoy en el ojo puesto para adquirir ya cuando ya vengan. Dice, ¿qué traza mi Marvin? ¿Cómo estamos, Ángel? Selvin Guzmán, allá estamos en lo profundo del mar y no salimos de aquí, hacemos que sea una linda perla. Eso es todo. Ángel 75, por favor, Powell. Yo creo que el mercado ya descontó la subida del interés. Si Powell dice lo esperado, nos vamos para arriba. Ok, muy gracias por compartir. Vamos a ver. Ana Montero, aquí presente. Estamos. Fernando Hernández, saludos, Marvin. ¿Cuál fue el porcentaje que pagaste en tus taxes? Total, no, hombre. ¿Por qué te gusta recordarme cosas feas? En realidad que no, eso no se le recuerda a nadie se le recuerda. Más cuando uno le toca pagar. No, hombre, ya me puse triste. Yo lo que no quiero es recordarme. Hasta las lágrimas me salieron ahorita. Oh. Bueno, olvidemos esos momentos malos, en serio, que ya estaba yo olvidando ese episodio de pagar taxes, hasta se me dio. Bueno, aquí estamos viendo los tres índices, los dos ya están rojos y uno verde, que es el Dow Jones, pero va más que ya quiere volverse al club de los rojos. Entonces, en este momento estamos viendo el mercado. Pongámoslo rojo porque así está. Coméntenme en la parte de abajo qué es lo que ustedes piensan que posiblemente va a pasar. O estará rojo o verde. Ok, vamos a hacerlo más alegre. Rojo o verde, si es que este quiere cambiar, porque no quiere cambiar. No nos quiere cambiar el colorcito. Bueno, no quiere. Bueno, y damos un fuerte abrazo a todos los que están conectando. Vamos a ver aquí. Vamos a ver. Espérenme. Dice aquí, saludos Marvin, las cosas se pondrán ofertas y demanda. Por fin estoy en un en vivo. Gracias, Irunel, aquí. Bienvenido. Víctor Dolentino, ya estamos aquí, Marvin. Polán del Carnal. Fernando Hernández se pone a reír. ¿Qué pasó? Y después, ya que me recordaste, te pones a reír de mis penas. Ay, Dios santo. Dice, tienes un sell put, lo puedes vender y ganarle antes que el plazo de vencimiento. En cualquier contrato tú puedes venir y cerrarlo. En realidad que en todos los contratos. Yo ahorita tengo un sell call. Ok, tengo un sell call en este momento. ¿Cómo está mi sell call? Vamos a ver cómo va mi sell call. ¿Cómo va el cocimiento de mi sell call? Ok, mi sell call va muy bien. Ok. Va, miren, mi sell call, vamos a compartirlo un poquito. Esos son los sell calls que tengo venciéndose lo que es esta semana. Ok, esta semana estos dos sell calls son los que los hice bastante arrasaditos, porque yo sí miraba que iba a caer el mercado. Ya están muy bien valorizados. Ok, entonces vamos a mostrar aquí ahora. Si no se han unido a nuestro club VIP, únanse. Ok, únanse porque ahí estoy mostrando movimientos, lo que estoy haciendo. También nos vamos a reunir el día de hoy. y ahí platicamos sobre el movimiento. Esto es lo que tengo en este momento, ¿ok? Aquí me gusta mostrarles, ahora esto no significa que lo hagan, esto siempre analicen y estudien antes de hacer cualquier movimiento, ¿ok? Esto es lo que tengo en este momento, que se vencen lo que es el día viernes, ¿ok? Ahora, estoy muy al pendiente porque sí es posible que si escucho algo positivo los voy a cerrar, ¿ok? Es muy posible. Entonces tenemos el ojo. Ahora, en lo personal, no quiero cerrarlos todavía porque yo sí estoy pensando que va a haber más a la baja y pues quiera o no, estos se pueden valorizar mucho más, ¿ok? Se pueden valorizar mucho más. Entonces, por lo mismo, yo estoy más a mejor ser paciente y que se valoricen todo su potencial. Entonces, yo estoy esperando, pero si veo algo muy positivo como un 25 basis points o algo así, voy a recomprarlos. Igual siempre estoy bastante positivo, entonces tengo margen para poder comprarlos, ¿ok? Entonces estoy bien. Un fuerte abrazo. Liseta, Marvin, ¿qué piensas de AMC? Bueno, AMC es AMC. Yo en realidad que yo les he dicho, a veces no hablo en AMC, pero a veces es porque en realidad que hay muchos temas están surgiendo y todo, pero AMC es AMC y que pues en este momento sufra o esté abajo, no quiere decir que el movimiento se vaya para, porque en realidad que no, realmente el movimiento siempre va a seguir. Lo que pasa es que son etapas y yo siento en lo personal que AMC cuando quiere también demostrar su fuerza lo hace. Lo que vimos hace como 3 semanas aproximadamente, cómo subió casi un 50%. Ahorita ha estado cediendo todo ese porcentaje, pero vemos lo que es su crecimiento. Ahora, toda la bolsa de valores está sufriendo en este momento. Y no me sorprendería que las que cuando comience a girar el mercado, pues las que salgan pues bastante fuertes, sea AMC, ¿verdad? No me sorprendería que eso pasara no solo con AMC, sino con GameStop. Todas estas que tienden a subir más rápido, ¿verdad? Y yo por lo menos por eso me mantengo yo firme. Yo realmente, como les decía yo, en los momentos bajos se compran y cuando salen pues uno saca algo de ganancias para mejorar las posiciones y así uno va creciendo, ¿verdad? Estamos a 3 minutos, a todos ya aquí con el cinturón puestos, todos están esperando. Ariel Rivera, hola Marvin, dice Oscar García, nos vamos en verde, nos vamos to the moon. Saludos Marvin, un fuerte abrazo. Hay personas que piensan que va a subir, hay personas que no. Vamos a ver qué es lo que termina pasando. ¿Será rojo, será verde? ¿Será rojo, será verde? ¿Será rojo, será verde? Ok, ahora yo en lo personal, yo voy a decirles desde ya lo que yo pienso. Yo pienso que va a haber rojo. Yo siento que Jerome Powell va a salir bastante agresivo, fuerte. Ya creo que él va a subir los 50 basis points y nos va a dejar con la duda que es posible que suban otros 50 basis points por más de 3 veces. Vamos a ver al final de todo, ¿ok? Pero yo me puedo equivocar, entonces siempre analicen y estudien. Entonces ahorita estamos a 2 minutos de la verdad. Todos aquí ya con paciencia, pensando qué será, qué irá a pasar, qué nos vendrá. ¿Será Jerome que nos haga el día o será Jerome que nos quite? Vamos a ver aquí, dice Jesús Parra, hola Marvin, ¿qué tal te la pasaste en Gurney? Muy bien, en realidad que me la paso súper bien en Gurney, me encanta, muy hermoso lugar, en realidad que hermoso, qué hermosos paisajes, en realidad que uno se sorprendería qué tan verde es todo por allá. En serio que pues uno piensa que todo verde, 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 verde. Hermoso, muy bonito lugar, muy bonito lugar. Oscar García, ya el mercado cayó demasiado, no creo que siga cayendo. Eso es cierto, como les digo yo, vamos a ver qué es lo que pasa. Yo sí pienso que pueda caer y sí pienso que pues el mercado pues pueda ver más rojo todavía, aunque no creo que sea mucho. Y aquí ya estamos, un fuerte abrazo a todos los que están conectando y vamos a ver lo que termina pasando el día de hoy. Aquí comenzamos. Un fuerte abrazo a todos. En serio que muchas gracias a todos. Y vamos a comenzar a ver. En ciertas partes no voy a hablar, mis amigos y amigas, porque voy a estar escuchando lo que él diga. Entonces, mucho ojo. Si comienzo a lo que es a comprar mi circle, lo estaré diciendo. Pero si no, pues ahí vamos a estar. Un fuerte abrazo. Estamos todos pendientes a lo que diga el tío Jerome. Aquí estamos, ¿cómo estamos? Un fuerte abrazo. Vamos a ver aquí. Ya no tarda de salir. Todos nerviosos y callados. Vamos a ver aquí. Estamos esperando que salga. Ya no tarda en salir en cualquier minuto. Ya está tarde. Díganle que por favor se apure. ¿Qué digo yo que se apure? Porque en realidad que tengo una cita ahorita en media hora. Muy bien, muy bien. Aquí dice Oscar García, atentos al lenguaje corporal de Jerome. Ok, muy bien. Esto ya estamos entrando a niveles más serios. Eso es todo. Si sale así como que enojado, con cara que pues ahorita les voy con todo, ya ni siquiera hay que esperar que hable. Yo no compro mi cédula, entonces. Eso sí, no, en realidad que tienes razón. Sale con la cara de decir, bueno, hoy sí les voy a dar con todo. Ya ni siquiera hay que escucharlo. Lucid está cayendo. Wow, Lucid está cayendo a 18.88. Perfecto, muy bien. Incluso si se valoriza bastante mi cédula, voy a ver si lo compro solo porque ya se valorizó. Muy bien, ok, un fuerte abrazo. Oh, salió sonriendo. Salió sonriendo.
Good afternoon. It's nice to see everyone in person for the first time in a couple of years. Before I go into the details of today's meeting, I'd like to take this opportunity to speak directly to the American people. Inflation is much too high, and we understand the hardship it is causing, and we're moving expeditiously to bring it back down. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2 years and have proved resilient. It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight and inflation is much too high. Against this backdrop, today the FOMC raised its policy interest rate by a half percentage point and anticipates that ongoing increases in the target rate for the federal funds rate will be appropriate.
Medio punto subieron.
In addition, we are beginning the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments.
Entonces sí, es medio punto lo que van a
After
bajar.
expanding at a robust 5.5% pace last year, overall economic activity edged down in the first quarter. Underlying momentum remains strong, however, as the decline largely reflected swings in inventories and net exports, two volatile categories whose movements last quarter likely carry little signal for future growth. Indeed, household spending and business fixed investment continued to expand briskly. The labor market has continued to strengthen and is extremely tight. Over the first 3 months of the year, employment rose by nearly 1.7 million jobs. In March, the unemployment rate hit a post-pandemic and near 5-decade low of 3.6%. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, and while labor force participation has increased somewhat, labor supply remains subdued. Employers are having difficulties filling job openings, and wages are rising at the fastest pace in many years. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 6.6%. Excluding the volatile food and energy categories, core PCE prices rose 5.2%. Aggregate demand is strong, and bottlenecks and supply constraints are limiting how quickly production can respond. Disruptions to supply have been larger and longer lasting than anticipated, and price pressures have spread to a broader range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to further exacerbate supply chain disruptions as well. Russia's invasion of Ukraine is causing tremendous loss and hardship, and our thoughts and sympathies are with the people of Ukraine. Our job is to consider the implications for the U.S. economy, which remain highly uncertain. In addition to the effects on inflation, the invasion and related events are likely to restrain economic activity abroad and further disrupt supply chains, creating spillovers to the U.S. economy through trade and other channels. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to restoring price stability. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by a half percentage point and stated that it anticipates that ongoing increases in the target range will be appropriate. We also decided to begin the process of reducing the size of our balance sheet, which will play an important role in firming the stance of monetary policy. We are on a path to move our policy rate expeditiously to more normal levels, assuming that economic and financial conditions evolve in line with expectations. There is a broad sense on the committee that additional 50 basis point increases should be on the table at the next couple of meetings.
Okay, entonces
we'll make our decisions meeting by meeting as we learn from incoming data and the evolving outlook for the
está
economy.
planificado, no confirmado.
And we will continue to communicate our thinking as clearly as possible. Our overarching focus is using our tools to bring inflation back down to our 2% goal. With regard to our balance sheet, we also issued our specific plans for reducing our securities holdings. Consistent with the principles we issued in January, we intend to significantly reduce the size of our balance sheet over time in a predictable manner by allowing the principal payments from our securities holdings to roll off the balance sheet, up to monthly cap amounts. For Treasury securities, the cap will be $30 billion per month for 3 months and will then increase to $60 billion per month. The decline in holdings of Treasury securities under this monthly cap will include Treasury coupon securities, and to the extent that coupon securities are less than the monthly cap, Treasury bills. For agency mortgage-backed securities, the cap will be $17.5 billion per month for 3 months and will then increase to $35 billion per month. At the current level of mortgage rates, the actual pace of agency MBS runoff would likely be less than this monthly cap amount. Our balance sheet decisions are guided by our maximum employment and price stability goals, and in that regard, we'll be prepared to adjust any of the details of our approach in light of economic and financial developments. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks. The committee is determined to take the measures necessary to restore price stability. The American economy is very strong and well-positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Estamos entonces 50 basis points, mis amigos y amigos, ya nos da un total de .75, ok. Sí habló sobre subir los intereses al 50,
Chair Powell, the
punto
unemployment
50
rate
por
at
las siguientes
3.6%
reuniones,
in March is
si es
now
necesario.
essentially at the level that the committee had expected would prevail over the next 3 years, and at the bottom end of FOMC participants' projections for the longer run rate that you submitted in the projections at the last meeting. How has your outlook for further declines in the unemployment rate changed since March? What does this imply for your inflation forecast? And how has your level of confidence changed with regard to the feasibility of slowing hiring without pushing the economy into recession? Thanks.
Thank you. So you're right. 3.6% unemployment is just about as low as it's been in 50 years. And I would say that I expect, and committee members generally expect, that we'll get some additional participation. So people will be coming back into the labor force. We've seen that, particularly among prime age people. And that will, of course, tend to hold the unemployment rate up a little bit. I would also expect, though, that job creation will slow. Job creation has been at more than 500,000 per month in recent months, very, very strong, particularly for this stage of the economy. And so we think with fiscal policy less supportive, with monetary policy less supportive, we think that job creation will slow as well. So it is certainly possible that the unemployment would go down further. So I would expect those to be relatively limited because of the additional supply and also just the slowing in job creation. Implications for inflation, really the wages matter a fair amount for companies, particularly in the service sector. Wages are running high, the highest they've run in quite some time. And they are one good example of, or good illustration, really, of how tight the labor market really is, the fact that wages are running at the highest level in many decades. And that's because of an imbalance between supply and demand in the labor market. So we think through our policies, through further healing in the labor market, higher rates, for example, of vacancy filling and things like that, and more people coming back in, we like to think that supply and demand will come back into balance and that therefore wage inflation will moderate to still high levels of wage increases, but ones that are more consistent with 2% inflation. That's our expectation. Your third question was?
Your level of confidence that you can slow hiring without pushing the economy into a downturn.
So I guess I would say it this way. There's a path. There's a path by which we would be able to have demand moderate in the labor market and therefore have vacancies come down without unemployment going up, because vacancies are at such an extraordinarily high level. They're 1.9 vacancies for every unemployed person, 11.5 million vacancies, 6 million unemployed people. So, and we haven't been in that place on the vacancy, sort of the vacancy unemployed curve, the Beveridge curve. We haven't been at that sort of level of a ratio in the modern era. So in principle, it seems as though by moderating demand, we could see vacancies come down, and as a result, and they could come down fairly significantly, and I think put supply and demand at least closer together than they are, and that would give us a chance to have get inflation down, get wages down, and then get inflation down without having to slow the economy and have a recession and have unemployment rise materially. So there's a path to that. Now, I would say I think we have a good chance to have a soft or softish landing or outcome, if you will, and I'll give you a couple of reasons for that. One is households and businesses are in very strong financial shape. You're looking at excess savings on balance sheets, excess in the sense that they're substantially larger than the prior trend. Businesses are in good financial shape. The labor market is, as I mentioned, very, very strong. And so it doesn't seem to be anywhere close to a downturn. Therefore, the economy is strong and is well positioned to handle tighter monetary policy. So, but I'll say, I do expect that this will be very challenging. It's not going to be easy. And it may well depend, of course, on events that are not under our control. But our job is to use our tools to try to achieve that outcome, and that's what we're going to do.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You talked about using 50 basis point rate hikes or the possibility of them in coming meetings. Might there be something larger than 50? Is 75 or a percentage point possible? And perhaps you could walk us through your calibration. Why 1 month or one meeting should we expect at 50? Why something bigger? Why something smaller? What is the reasoning for the level of the amount of tightening? Thank you.
Muy buena pregunta. Si pueden subir a 75.
75 basis point in an increase is not
siguiente.
something the committee is actively considering. What we are doing is we raised 50 basis points today, and we've said that, again, assuming that economic and financial conditions evolve in ways that are consistent with our expectations, there's a broad sense on the committee that additional 50 basis point increases should be on the table for the next couple of meetings. So we're going to make those decisions at the meetings, of course, and we'll be paying close attention to the incoming data and the evolving outlook, as well as to financial conditions. And finally, of course, we will be communicating to the public about what our expectations will be as they evolve. So the test is really just, as I laid it out, economic and financial conditions evolving broadly in line with expectations. And, I think expectations are that we'll start to see inflation, flattening out and not necessarily declining yet, but we'll see more evidence. We've seen some evidence that core PCE inflation is perhaps either reaching a peak or flattening out. We'll want to know more than just some evidence. We'll want to really feel like we're making some progress there. But I mean, we're going to make these decisions, and there'll be a lot more information. I just think we want to see that information as we get there. It's a very difficult environment to try to give forward guidance 60, 90 days in advance. There are just so many things that can happen in the economy and around the world. So, we're leaving ourselves room to look at the data and make a decision as we get there.
I'm sorry, but if inflation is lower 1 month and the unemployment rate higher, would that be something that we would calibrate towards a lower increase in the funds rate? Or
I don't think 1 month is not no 1 month's reading doesn't tell us much. We'd want to see evidence that inflation is moving in a direction that gives us more comfort. As I said, we've got 2 months now where core inflation is a little lower, but we're not looking at that as a reason to take some comfort. I think we need to really see that our expectation is being fulfilled, that inflation, in fact, is under control and starting to come down. But it's not like we would stop. We would just go back to 25 basis point increases. It'll be a judgment call when these meetings arrive. But our expectation is, if we see what we expect to see, then we would have 50 basis point increases on the table at the next two meetings.
Thanks. Let's go to Colby.
Thank you. Colby Smith from the Financial Times. Given the expectation that inflation will remain well above the Fed's target at year end, what constitutes a neutral policy setting in terms of the Fed funds rate? And to what extent is it appropriate for policy to move beyond that level at some point this year?
So, neutral. When we talk about the neutral rate, we're really talking about the rate that neither pushes economic activity higher nor slows it down. So it's a concept, really. It's not something we can identify with any precision. So we estimate it within broad bands of uncertainty. And the current estimates on the committee are sort of 2 to 3%. And also, that's a longer run estimate. That's an estimate for an economy that's at full employment and 2% inflation. So really what we're doing is we're raising rates expeditiously to what we see as the broad range of plausible levels of neutral. But we know that there's not a bright line drawn on the road that tells us when we get there. So we're going to be looking at financial conditions, right? Our policy affects financial conditions, and financial conditions affect the economy. So we're going to be looking at the effect of our policy moves on financial conditions. Are they tightening appropriately? And then we're going to be looking at the effects on the economy. And we're going to be making a judgment about whether we've done enough to get us on a path to restore price stability. It's that. So if that path happens to evolve levels that are higher than estimates of neutral, then we will not hesitate to go to those levels. We won't. But again, there's a sort of false precision in the discussion that we as policymakers don't really feel. You're going to raise rates, and you're going to be kind of inquiring how that is affecting the economy through financial conditions. And of course, if higher rates are required, then we won't hesitate to deliver them.
Neil?
Thanks, Chair Powell. Neil Irwin with Axios. Do you see evidence that inflationary psychology is changing, that in areas like workers' wage demands, businesses' willingness to raise prices, do you see evidence that there is a psychological shift going on inflation? Thanks.
We don't really see strong evidence of that yet, but that does not in any way make us comfortable. I think if you look at short-term inflation expectations, they're quite elevated. And you can look at that and say, well, that's because people expect inflation to come down. And in fact, inflation expectations come down fairly sharply. Longer-term inflation expectations have been reasonably stable, but have moved up but only to levels where they were.
El mercado lo está tomando muy bien, ok, eso es todo. Aunque sí subieron los intereses a lo esperado, 0.50 basis points, ok, aquí rapidito, qué es lo que está sucediendo, subieron los intereses a 50 basis points. El mercado lo tenía facturado, entonces esto es bueno, ok, pero sí se van a subir, está en la mesa sobre otras 2 veces más, 50 basis points, pero habló sobre que el 0.75 basis points, pues sí, no se ha hablado, entonces es muy seguro que las otras 2 subidas van a ser de 50 basis points. Ahora, esto nos estamos dando cuenta que el mercado lo tenía facturado y pues estamos viendo un retroceso. Esto es bueno, ¿ok? Llegó un poquito más suave de lo esperado. Lo estaba hablando en una forma bastante suave a lo que se esperaba. Entonces también lo está tomando bien el mercado. Un fuerte abrazo a todos los que están ahí conectados.
We can't run that risk. We can't allow a wage price spiral to happen, and we can't allow inflation expectations to become unanchored. It's just something that we can't allow to happen, and so we'll look at it that way.
Gina?
Great. Thanks, Chair Powell. Gina Smilik with the New York Times. You mentioned in the statement both the upside risks to inflation from Russia and China. Obviously, those are very much supply shocks rather than demand side. And I wonder what you meant to convey by adding them. I wonder what you meant to convey by adding those.
Well, so our tools don't really work on supply shocks. Our tools work on demand. And to the extent we can't affect really oil prices or other commodity prices or food prices and things like that. So we can't affect those. But there's a job to do on demand. And that you can see that in the labor market where demand is substantially in excess of supply of workers. And you can see it in the product markets as well. But I guess I'm just pointing out that a couple of things. For both the situation in Ukraine and the situation in China, they're likely to both add to headline inflation, and people are going to be suffering from that. You know, people almost suffer more from food and energy shocks but even though they don't actually tell us much about the future path. So, but the second thing is that they're both capable of preventing further progress in supply chains healing, and so, or even making supply chains temporarily worse. So they're going to weigh on the process of global supply chain healing, which is going to affect broader inflation too. So in a way, they're two further negative shocks that have hit really in the last, 60 days, 90 days.
Victoria?
Hi, Victoria Guida from Politico. I want to follow up on that because you all have obviously highlighted that there are both supply and demand issues at play in inflation. And I'm just wondering, if these supply chain issues continue because of Russia, because of China, or just because these things take a while to work out, does getting back down to your 2% mandate require that these supply chain issues get resolved, since you can only handle the demand side, as you said, or will you have to crimp demand maybe even further if the supply chain issues don't resolve themselves in order to try and get inflation back down to where you want it to be?
So, I'll just say for now, we're focused on doing the job we need to do on demand, and there's plenty to be done there. Again, if you look at it, it's essentially almost 2 to 1 job vacancies to unemployed people. There's a lot of excess demand. There are more than 5 million more employed plus job openings than there are the size of the labor force. So there's an imbalance there that we have to do our work on. It's a very difficult situation if you can't, you would look at core inflation, which wouldn't include the commodity price shocks, and that's one of the reasons we would tend to focus on that, because we can have more of an effect on that. But it would be a very difficult situation. I mean, we have to be sure that inflation expectations remain anchored, and I mean that's part of our job too. So we'd be watching that carefully, and it puts any central bank in a very difficult situation.
Howard Schneider with Reuters, and thanks, and nice to be back. Two questions, one quick one. You cited the 1.9 to 1 figure so often now. I got to ask you, what would be a good figure there? What would you like to see that come down to think that you're at sort of a non-inflationary vacancy to unemployed rate? And secondly, on help from inflation, how much are you counting on wealth effects through stock market channels? Equity markets broadly down quite a bit since late fall, first of the year. How are you mapping that into household consumption? Have they come down enough? Do you need another leg down in equity values to think that households are going to stop spending at the rate you need them to stop spending?
Okay, so in terms of the vacancies to unemployment ratio, we don't have a goal in mind. There's no specific number that we're saying we got to get to that. It's really you've got to get to a place where the labor market appears to be more in balance, and that depends not only on the level of those things. It depends on how well the matching function in the labor markets are working, because the longer these expansions go on, you can get very efficient with all of that, and the beverage curve shifts out, and that also tends to help. So there isn't a specific number. I will say we were at, I think when we got to 1-to-1 in the late teens, we thought that was a pretty good number. But again, we're not shooting for any particular number. What we'd like to see is progress, but we're not really looking at that. That's an intermediate variable. We're looking at wages, and we're looking at ultimately inflation. So there are a bunch of channels through which policy works. You can think of it as interest-sensitive spending, and then you can think of another big one as asset values broadly. And there are big models with a lot of different channels that are related to that. We don't focus on any one market, the equity market or the housing market, or we focus on financial conditions broadly. So we wouldn't be targeting any one market, as you suggest, for going up or down, or taking a view on whether it's at a good level or a bad level. We just would be looking at very broad measures of financial conditions, all the different financial conditions indexes, for example, which include equity, but they also include debt and many other things, credit spreads, things like that too.
Rachel.
Hi, Chair Powell. Rachel Siegel here from the Washington Post. To follow up from your message from the very beginning, what is your message to the American people about when they will start to feel the effects of, say, a 50 basis point rate hikes or multiple hikes? How do you explain to them what that does to their grocery bill or their rent or their gas bill? Thank you.
So the first thing to say is that we understand, and some of us are old enough to have lived through high inflation, and many aren't, but it's very unpleasant. It's just something people don't, when they experience it for the first time. You're paying more for the same thing. If you're a normal economic person, then you're probably don't have that much extra, to spend, and it's immediately hitting your spending on groceries, on gasoline, on energy, and things like that. So we understand the pain involved. So how do you get out of that? And it's our job to make sure that inflation of that unpleasant high nature doesn't get entrenched in the economy. That's what we're here for. One of the main things we're here for. Perhaps the most fundamental thing we're here for. And the way we do that is we try to get supply and demand back in sync with each other, back in balance, so that the economy is under less stress and inflation will go down. Now, the process of getting there involves higher rates, so higher mortgage rates, higher borrowing rates, and things like that. So it's not going to be pleasant either. But in the end, everyone is better off. Everyone, particularly people on fixed incomes and at the lower part of the income distribution, are better off with stable prices. And so we need to do everything we can to restore stable prices. We'll do it as quickly and effectively as we can. we think we have a good chance to do it without significant increase in unemployment or really sharp slowdown. But ultimately, we think about the medium and longer term, and everyone will be better off if we can get this job done. The sooner, the better.
Thank you, Chair Powell. Edward Lawrence with the Fox Business Network. So you've talked in the past about consumer spending and how that's drives the economy. Are you concerned with this high level of inflation that the consumer will stop spending, pushing us into, and what's the level of your concern, pushing us into a recession?
So the economy is doing fairly well. We expect growth to be solid this year, and we see household spending and business investment as fairly strong, even in the first quarter, which was relatively slow on some other fronts. So, and the labor market. If you look at the labor market, for people who are out of work and looking, there are lots of job opportunities. For wages are moving up at rates that haven't been seen in quite a long time. So it's a good time to be a worker looking to either change jobs or get a wage increase in your current job. So it's a strong economy, and nothing about it suggests that it's close to or vulnerable to a recession. Now, of course, given events around the world and fading fiscal policy effects and higher rates, you could see some slower economic activity. Certainly it will not be. Last year was an extraordinarily strong growth year as we recovered from the pandemic. As I mentioned, growth over 5%. But most forecasters have growth this year at a solid pace, above 2%.
But we've talked with economists who have advised Democrats and Republican presidents who both said that the Fed is so far behind the curve on inflation that a recession is inevitable.
So, and as I said, I think we have a good chance to restore price stability without a recession, without a severe downturn, and without materially higher unemployment. And I mentioned the reasons for that. So I see a strong economy now. I see a very strong labor market, for example. Businesses can't find the people to hire. They can't find them. So typically in a recession, you would have unemployment. Now you have surplus demand. So there should be room, in principle, to reduce that surplus demand without putting people out of work. The issue will come that we don't have precision surgical tools. We have essentially interest rates, the balance sheet, and forward guidance, and they're famously blunt tools. They're not capable of surgical precision. So I would agree. No one thinks this will be easy. No one thinks it's straightforward, but there's certainly a plausible path to this, and I do think we've got a good chance to do that. And our job is not to rate the chances. It is to try to achieve it. So that's what we're doing. There are a range of opinions, though, and that's only appropriate.
Steve Dorsey.
Thanks, Steve Dorsey, CBS. You mentioned earlier just now fading fiscal policy. Do you feel that the Fed has been supported enough from policies at the White House and in Congress in combating inflation?
It's really the Fed that has responsibility for price stability, and we take whatever arrives at the Fed in terms of fiscal activity. We take it as a given. We don't evaluate it. We don't. It's not our job, really. We don't have an oversight function there, and we look at it as our job to given all the factors that are happening, to try to sustain maximum employment and price stability. So, if the Congress or the administration has ways to help with inflation, I would encourage that, but I'm not going to get into making recommendations or anything like that. It's really not our role. We need to stay in our lane and do our job. When we get inflation back under control, then maybe I can, give other people advice. Right now, we need to focus on doing our job, and I'll stick to that. Stick in our lane.
Steve Matthews.
Steve Matthews with Bloomberg News. A number of your colleagues have said that rates will need to go above neutral into a restrictive territory to bring down inflation. One, do you agree with that? And two, you recently spoke in great praise of Paul Volcker, who had the courage to bring inflation down with recessions in the 1980s. And while it's certainly not your desire, and the soft landing is the big hope of everyone, would this FOMC have the courage to endure recessions to bring inflation down if that were the only way necessary?
So I think it's certainly possible that we'll need to move policy to levels that we see as restrictive as opposed to just neutral. We can't know that today. That decision's not in front of us today. If we do conclude that we need to do that, then we won't hesitate to do it. I'll say again, there's no bright line, that you're stepping over. You're really looking at what our policy stance is and what the market is forecasting for it. You're looking at financial conditions and how that's affecting the economy and making a judgment. We won't be arguing about whose model of the neutral rate is better than the other one. It's much more about a practical application of our policy tools. And we're absolutely prepared to do that. Wouldn't hesitate if that's what is taken. So I am, of course, who isn't an admirer of Paul Volcker? I shouldn't be singled out in this respect, but I knew him just a little bit and have tremendous admiration for him. And I would phrase it this way. He had the courage to do what he thought was the right thing. That's what it was. It wasn't a particular thing. It was that he always did what he thought was the right thing. If you read his last autobiography, that really comes through. So that's the test. It isn't will we do one particular thing. I would say we see restoring price stability as absolutely essential for the country in coming years. Without price stability, the economy doesn't work for anybody, really. And so it's really essential, particularly for the labor market. If you think about it, if you look at the last cycle, we had a very, very longest expansion cycle in our recorded history. And in the last 2-3 years, you had the benefits of this tight labor market going to people in the lower quartiles, and it was racial wealth and income, not wealth, but income gaps were coming down, wage gaps. So it's a really great thing. We'd all love to get back to that place, but to get back to anything like that place, you need price stability. So we've been hit by historically large inflationary shocks since the pandemic. This isn't anything like regular business. This is we have a pandemic. We have the highest unemployment, since the Depression. Then we have this outsized response from fiscal policy and monetary policy. Then we have inflation. Then we have a war in Ukraine, which is cutting the commodity, patch in half. And now we have these shutdowns in China. So it's been a series of inflationary shocks that are really different from anything people have seen in 40 years. So we have to look through that and look at the economy that's coming out the other side, and we need to somehow find price stability out of this. And it's obviously going to be very challenging, I think, because you do have numerous supply shocks which are famously difficult to deal with. So I guess that's how I think about it.
Chris.
Thank you. Chris Rugaber at Associated Press. Earlier, you just said that if necessary, I think were the words, that you would, or if it turned out to be necessary, or you said it's possible that we'll need to move policy to restrictive levels. Given where inflation is and the hot economy is, or certainly the hot labor market as you described it, why still the hesitation? I mean, shouldn't it be, what else do you need to see in order to determine that? Wouldn't the Fed naturally be looking to go to a restrictive level at this point? Thank you.
So if I said necessary, I meant to say appropriate. We're not going to be erecting a high barrier for this. It's more if we think it's appropriate. The point is we're a very long way from neutral now. We're moving there expeditiously, and we'll continue to do so. And we can't make that decision really today. The decision about how high to go will be on the table to be made when we reach neutral. And, I expect we'll get there expeditiously, as I've mentioned. So it's not that we don't want to making that decision today wouldn't really mean anything. But I'll say again, if we do believe that it's appropriate to go to those levels, we won't hesitate.
Mike McKee from Bloomberg Television and Radio. The balance sheet, why did you decide to wait until June 1st to begin letting securities roll off and not immediately start in the middle of this month, say? And do you have a newer or a better estimate for the monetary policy impact of letting the balance sheet decline? And then finally, I'm just curious why you felt the need to address the American people at the top of your remarks. Are you concerned about Fed credibility with the American people?
So why June 1? It was just pick a date, and that happened to be the date that we picked. It was nothing magic about it. It's not going to have any macroeconomic significance over time. We just picked that. Sometimes we publish these calendars on the first day of the month, and that's what we're doing. I wouldn't read anything into it. In terms of the effect, I would just stress how uncertain the effect is of shrinking the balance sheet. We run these models, and everyone does in this field, and make estimates of what will be the how do you measure, a certain quantum of balance sheet shrinkage compared to quantitative easing. And these are very uncertain. I really can't be any clearer. There won't be any clearer. People estimate that that broadly on the path we're on, and this will be taken probably too seriously, but sort of 1/4%, one rate increase over the course of a year at this pace. But I would just say with very wide uncertainty bands, very wide. We don't really know. There are other estimates that are much smaller than that, by the way, and some of you may have read about that. That's kind of a mainstream estimate. We know that it is part of returning to more normal, more neutral financial conditions. And our strategy is to set up a plan and have it operate, and really have the interest rate be the active tool of monetary policy. In terms of speaking to the American people, I feel like sometimes I want to remind us really that that's who we work for, and that it's inflation that people are feeling all over the country, and it's very important that they know that we know how painful it is, and that we are working hard on fixing it. I thought it was quite important to do that, and so that was really the thinking behind that.
Do you think the Fed has a credibility problem?
No, I don't. And a good example of why would be that, so in the fourth quarter of last year, as we started talking about tapering sooner and then raising rates this year, you saw financial markets reacting, very appropriately. Not to bless any particular day's measure, but the way financial markets, the forward rate curve has tightened in response to our guidance and our actions, really amplifies our policy. I mean, it's monetary policy is working through expectations now to a very large extent. We've only done 2 rate increases, but if you look at financial conditions, the 2-year is at 280 now. In September, I think it was at 20 basis points, and that's all through the economy. People are feeling those higher rates already, and that shows that the markets think that our forward guidance is credible. And I think that's we want to keep it that way.
Scott Horsley, did you have your hand up? Okay. Brian, Chung.
Hi there, Brian Chung with Yahoo Finance. To expand on Steve's question about Paul Volcker, there was also a great pain that came with that as well. Higher interest rates obviously affecting households and businesses, and wondering how you kind of square what might be demand destruction. Are you already seeing that? Is the idea here to incentivize a lack of spending, to decrease consumption, to perhaps table business investments? Is that essentially what's happening through this hiking cycle? Thanks.
Well, so as I mentioned, you can see places where their demand is substantially in excess of supply, and what you're seeing as a result of that is prices going up and at unsustainable levels that are not consistent with 2% inflation. And so what our tools do is that as we raise interest rates, demand moderates and it moves down. Interest rates, businesses will invest a little bit less, consumers will spend a little bit less. That's how it works. But ultimately, getting supply and demand back in balance is what gives us 2% inflation, which is what gives the economy a footing where people can lead successful economic lives and not worry about inflation. I mean, so yes, there may be some pain associated with getting back to that, but the big pain is in not dealing over time, is in not dealing with inflation and allowing it to become entrenched.
Thank you. Thank you, Chair Powell. Greg Robb from MarketWatch. I was wondering if you could take a step back and talk about, in March, the dot plot had, steady, looked like steady quarter-point rate hikes, get the funds rate up to 2% at the end of the year. Now, it seems like you're much more aggressive. So could you talk about the thinking that's behind that? Thank you.
So, look, I think what you've seen is really, I would say, last fall, in the middle of last fall, there was a time when our policy stance was still pretty much in sync with what the data were saying. If you remember, there were a couple of weak jobs reports, and inflation had actually come, month by month inflation had come down till September, a few months in a row, stayed low. And then around the end of October, we got three or four really strong readings that just said, no, this is a much stronger economy. And by the way, then with the restatement of the jobs numbers, it looked like the job market was much more even and stronger in the second half of the year. But that hadn't happened yet. Anyway, we got an ECI reading, Employment Compensation Index reading, the Friday before the November meeting. Then we got a really strong jobs report. Then we got a really high CPI report. And so I think it became clear to the committee that we needed to adjust and adapt. And we have. Ever since then, really ever since then, we've been adapting. The committee moved by the time of the December meeting to a meeting of 3 rate increases, then to a meeting of 7 rate increases at the March meeting. And that process is going on, and it's clearly continuing. And that's why I say, and I actually mentioned this at the March meeting, that no one should look at any single SEP as sort of a real resting place for 90 days, because we're in a fast evolving situation, and that's what's happened. You can see unanimous vote today, of course, and I told you the guidance that broad support on the committee to have 50 basis point hikes on the table at the next couple of meetings. So you're right, and by the way, other forecasters have been doing the same thing, and it's just us adapting to the data and to the situation and using our tools to deal with it.
Thanks. We'll go to Nancy for the last question.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, I want to ask how you're able to balance your dual mandate, stable prices and maximum employment, especially when the unemployment rate for black workers is still roughly twice the rate for white workers.
So unemployment rates for all racial groups have come down a lot and are now much closer to where they were before the pandemic hit. So that's one thing I would say, and that's important. But the bigger point is this: I do not at this time see the two sides of the mandate as in tension. I don't, because you can see that the labor market is out of balance. You can see that there's a labor shortage. There aren't enough people to fill these job openings, and companies can't hire, and wages are moving up at levels that would not over time be consistent with 2% inflation over time. And of course, everyone loves to see wages go up, and it's a great thing, but you want them to go up at a sustainable level, because these wages are to some extent being eaten up by inflation. So what that really means is, to get the kind of labor market we really want to get, we really want to have a labor market that serves all Americans, especially the people in the lower income part of the distribution, especially them. To do that, you've got to have price stability. And we've got to get back to price stability so that we can have a labor market where people's wages aren't being eaten up by inflation, and where we can have a long expansion too. That's the good thing, is you can have, as we've had several of the longest expansions in U.S. history have been in the last 40 years, and that's because it's been a time of low inflation. And long expansions are good for people and good for the labor market. So that's the way I think about it. I think our tools work. We have to think in the medium and longer term, and I do think that the best thing for everyone is for us to get back to price stability to support really a sustained period of strong labor market conditions. Thanks very much.
Bueno, amigos y amigas, ahí tenemos a Jerome Powell. ¿Qué les pareció? ¿Vieron qué giro dio el mercado? En realidad, increíblemente súper bien, ¿ok? Pero lo que sí no tenemos que olvidar que sí terminaron subiendo los intereses, como se había dicho. Aunque el mercado es así, ¿ok? El mercado a veces uno puede decir que puede caer, pero puede irse al revés y por eso es siempre necesario analizar y estudiar. Ahora, ¿qué es lo que sucedió? Se sucedió lo que se esperaba, ¿ok? Primero, sabemos muy bien que sí subieron los intereses, 50 basis points es lo que tenemos en este momento. También habló sobre que en lo que las siguientes reuniones van a tener en la mesa lo que son los 50 basis points. Era lo que se esperaba y lo que el mercado ha facturado. En pocas palabras, tenemos otros 2 incrementos de 50 basis points muy posibles, ¿ok? Que puedan venir. Ahora, esto era lo que se esperaba. Realmente lo que la Fed sí se volvió más hawkish porque en realidad que terminaron subiendo más los intereses. Ahora, el mercado ya había sobrefacturado esto y podemos ver que tuvo una corrida a la alza y aquí nos estamos dando cuenta, muchas acciones muy positivas. Ahora yo en lo personal, yo pensaba que el mercado iba a caer porque quiera o no, pues sí hubo el incremento y sí va a haber un incremento en las próximas alzas en un futuro. Ahora, ¿qué es lo que yo hice? Yo en lo personal me mantuve con mi sell call, aunque lo crean o no. Nos mantuvimos. ¿Por qué? Es porque yo le tengo un precio a lo que son 20.50. Y en realidad que si se vende, pues igual yo voy a generar mucho dinero porque le he estado trabajando bastante el sell call. Y pues todavía faltan los earnings para Lucid. Entonces yo no sé si pueda superar los 20.50 para el viernes. Y por eso, quiera o no, yo terminé pues no comprando el sell call y me mantuve. Ahora, porque puede haber un retroceso, puede haber un soporte en que no sobrepase los 20 y entre los 20 y 50 pues todavía quedan 2 días y puedo generar mucho si me mantengo. Entonces me mantuve, ¿ok? Ahora, yo lo hubiera comprado el sell call si en dado caso pues hubiera escuchado algo sobre 25 basis points, ¿ok? Ahora no fue así, no escuché nada sobre 25 basis points, sí subió a lo que se esperaba y por eso mismo también puede haber un retroceso en el mercado. Entonces, al final del todo, por eso me mantengo todavía firme en mi sell call. Si se vende, pero al final de todo le voy a generar dinero y pienso que la acción de Lucid puede hacer que no sobrepase los 20.50 para el viernes. Entonces, estamos ahí, todavía me mantuve. Un fuerte abrazo a todos los que se conectaron en lo que es esta conferencia de Jerome Powell. Habló sobre ciertos puntos, algo que sí dijo que subir lo que son puntos 75 pues sí no está en la mesa, que estas son buenas noticias. Entonces no habló nada sobre subir más de los 50 basis points, entonces eso es algo bueno, pero por sí tuvimos un incremento y estamos ahorita en puntos 75 en total, ok, y esto es algo que sí tenemos que considerar. Espero que les haya gustado. Si les gustó la transmisión, mis amigos y amigas, destruyan el botón que les gusta, por favor. Ayudan increíblemente a que comience a crecer más este canal. Entonces denle me gusta, compártanlo. Nos vamos a ver en lo que es el cierre del mercado en un par de minutos. Entonces ahí les mando un fuerte abrazo. Vamos a ver lo que es el cierre del mercado y ahí nos estamos viendo en el cierre. Un fuerte abrazo a todos los que están en el Club VIP. Nos vemos en una hora después que cierre el mercado también. Entonces esténse ahí, denle me gusta. No se olviden de lo que son nuestros cursos. Aquí está nuestro curso. Estará subiendo de precio ahorita que les suba más contenido. Entonces se pueden venir y únanse a nuestro Club VIP. Hoy estaremos viendo una serie. Entonces ahí a todos los que están ahí, un fuerte abrazo. Recuérdense que no hay nada imposible, que todo lo podemos hacer si nos lo proponemos. Gracias a todos los que se conectaron y nos estamos viendo en el cierre en el mercado en un par de minutos. Entonces nos vemos y un fuerte abrazo a todos. Nos vemos, mis amigos y amigas. Gracias por sintonizar aquí al tío Jerome Powell. Vamos.